In this video, I am going to break down 6 reasons why you keep getting denied for business credit every time you apply for it, whether you are an existing business or a startup. Some of them are uncommon that you've most likely never heard before. So if you are looking to reduce the denials that you get and ultimately increase the amount of approvals that you get on the back end, go ahead, check this video out. I will see you on the other side. So 6 reasons why your business is not getting funding. And so I first want to lead off with this before I give you guys the first one. What you see here is your profiles aren't fully built out or updated everywhere. A lot of times people think that, well, you just need to have stellar business credit or stellar personal credit in order for you to get approved for funding, especially when you're personally guaranteeing. That's part of it, but I want to give you the full landscape of that. So I'm assuming you already have a strong personal credit score, even though we'll be touching on that a little bit here in this video. But when I'm referring to your profiles, I'm referring to how your business is structured, your personal information, and how it all comes together and tells a story to these 5 different areas or these 5 different levels. So the first level is going to be right here at the state level. This is where your business is registered. So whether you have a domestic entity, which means where your business was established, or if you have a foreign entity, meaning you want to partake in doing business in another state, so you're now pretty much gaining access to those banks. You're now gaining access to be able to run your business in, say, North Carolina, even though your domestic entity or where your LLC started is maybe in, say, Pennsylvania. So that's the difference there. So you want to make sure that your profiles are fully updated, or that your profile rather is fully updated across the board with the state. So this is directly with your Secretary of State. Now, this is in no particular order, but I always like to start out at the state level just because it's kind of like home base. It's where everything starts, right? Next place that you want to go ahead and make the adjustments, and this is going to be state by state, county by county, so you're going to want to do a little bit of due diligence on this, is at the local level. Some states are going to require you to publish things like newspaper articles or get media coverage or run a local ad on a paper if you had maybe a change on your business. So if you had a name change or if you had an address change, you may need to post that up on a local newspaper in at least 2 different locations. If we're talking about New York, it's at least 2 different locations within 6 weeks. It's typically what it is, right? Every state's going to be different, but you want to have that updated. Third level is going to be at the federal level. So once you've notified the state, once you've maybe done the local change, you of course want to notify the IRS. Hey, there's a name change. Hey, I want to change my EIN. Hey, I want to change my business address. You're going to make that next adjustment, making sure that it all matches inside of the federal level. 4th level deep that we're going into is the financial level: banks, credit unions, lenders, vendors, and suppliers. This one right here is huge because you can make all of these changes with the state, with the county, with your, maybe with your, or at the federal level, maybe with the IRS. All of a sudden you get to the financial level and then maybe you don't make the proper change with the bank, or you don't make the proper change with the credit union, and they are still underwriting you with the old address, or they're still underwriting you with the old maybe business classification because you haven't made the proper changes. Especially if you're reclassifying the business, you can follow this exact framework, not just for basic things like addresses or for even names of a business, but you can also use it for the reclassification of a business. But if, let's say, they go to pull your information because they always validate it and they're always running it against some of the data sources that they have, which we'll get into here in just a second, they say, wait a minute, you're on 123 Main Street according to the documents that you're giving us, but we just ran a search right on the Secretary of State and they still have 567 Main Street. And so it's off, and that also flags for an automatic denial. That's what I mentioned earlier. Even if you have stellar credit, you can have that one piece of information can be the missing link that breaks the entire chain and keeps you from getting access to business credit, which is, I don't want you to fail, which is why I'm giving you access to this information. And then last but not least, at the bureau level, this is going to be twofold. You want to make sure that everything is up to date, whether it's the classification of your business, the industry that you're in, the naming of your business, the business address, the business website, the phone numbers, like the whole 9 yards, the boring stuff that no one wants to do, no one wants to work on, which is what I'm always drilling with my clients, is fixing it 5 levels deep and not forgetting to also update the bureaus, because this is also where banks are ultimately going to look at when they are qualifying you for funding. So Experian, TransUnion, and Equifax on the personal side. If we're talking about on the business side, there's over 10 big bureaus or main bureaus, but you want to really focus on the biggest ones on the business side, which is going to be Dun & Bradstreet, Experian, and Equifax. Those will really be the main 3 that we've seen a lot of banks still underwriting with, and suppliers and vendors. And so as long as you have those dialed in, you should be fine. Moving down into the second reason why you're most likely getting denied, or why people tend to run into denials, is existing debts are too high. Now, there's a few different ways that I'm going to break this down, because oftentimes we tend to just stop at, okay, as long as my personal credit utilization is good, if I'm personally guaranteeing under 20%, which is typically what I recommend clients, under 20% or less, the lower the better, that's a good place to stop. So this right here is with your existing bank. So I don't just want you to look at, okay, I have under 20%. That's good. But I also want you to look at with existing bank. So I'll give you an example. We had a client that wanted to go back into Chase, and they wanted to get access to a second Business Inc. card. Now, here was the dilemma that they were running into. Even though all of their utilization across the board with revolving lines, with revolving credit lines, with the different banks that they had, were all under 20%, inside of Chase with their first account, which was their first Business Inc. card, they had over 70% utilization. And so the bank is going to pull 2 things. Number one is they're going to look at your total revolving debt, and they're also going to take a look at your debt with them internally. So again, missing link, you can have under 20% on all the debts, but if you still owe them, say over 70, over 80%, they're going to look at your file like you're over leveraged. So why are you asking us for money if you still have some of our money out there? So you also want to work on bringing that utilization down, so that way you have both outside of the network of that bank and also inside. Now, a little of like 1.2 or dash A or dash B on this that I can give you with existing banks is you want to pay attention to what they call total lending exposure. What that means is, let's say, again, if we're looking at a bigger bank like a Chase or a Bank of America, a good rule of thumb is right around $150,000. That's typically what they're going to ask for or allow you to get before they start asking for additional documentation. This is typically how you can do more of the no-doc type of products, is up to $150K. Does this mean that once you ask for more than $150,000, they're going to deny you? No. What it means is they're going to ask you for more things like personal statements, last 2 years of tax returns, last 2 years of personal statements or personal tax returns, profit and loss statements. So they're going to make it a bit tougher. So once you start inching your way up to above that 150 mark, keep that in mind, which is why you want to pay attention to your total debts inside of the existing bank, which leads me into the second point here with existing debts when they're too high, is inside of the banking network, but they're still reflecting U.S. Bank and Elon Financial. So if you don't know what this means, U.S. Bank holds, or I should say Elon Financial is a subsidiary, meaning kind of like an umbrella shelf company or an umbrella company under the U.S. Bank head. So it goes U.S. Bank, then Elon Financial. Why is that important? The reason that's important is because Elon Financial oversees over 1,500 local and regional banks, meaning they underwrite for them. So if you get one too many accounts on the local side, let's say with I'll give you 2 big ones out here in Florida. So we have Seacoast, and then we have, who's another one that underwrites with them? Ameris is another one. So Seacoast and Ameris. So you have Seacoast or even South End Bank, right? So I just gave you 3 right there that we typically see in the Southeast region. If I get 2 business credit cards with them, even though they're technically with different banks, they're underwritten by third-party company Elon Financial, who is overseen by U.S. Bank. So now if I were to go in with U.S. Bank, and let's say that I owe both those cards as well, maybe they're over a 25-30% threshold on how much I've used, U.S. Bank is going to say, wait a minute, there's money out there that you are still owing us, so why should we extend you credit? Now, if you try to do that and you try to go to maybe Chase, that's fair game because Chase and other banks can't see how much other banks are lending out to you unless it's reporting on your personal credit report. But remember, when it's on the personal credit report side, it's not reflecting. I'm sorry, when it's on the business credit report side, it's not reflecting over on the personal side. But it is reflecting internally inside of the same network. Same thing with FNBO network. Same thing with a TCM, Total Card Management Network. Just giving you a couple off the top of my head. Last but not least, outside of the bank network, but still on credit file, what that means is that's typically what most people refer to with existing debts is, well, I have less than 20% utilization. But the 20% utilization that they're typically looking at is on their main FICO, which is on their personal accounts. So that's usually the first place you want to start, but then you want to really, what I say, crank down to these right here, these two sections right here, within this existing bank and inside of the existing banking network. Try saying that 100 times, right? So outside of the banking network, that's just basic. That's, I have a personal Amex. I have a personal Chase Freedom. I have a personal Bank of America AmeriCard, whatever that is. That's what typically you'll see people talk about with their existing debt outside of the banking network, but still on the credit file. So you definitely want to make sure that that's under 20% when you're going in for funding. And if it's not, again, another strong indicator of why you're getting denied. Moving on to number 3 is lending exposures are tapped out. I kind of hinted at it earlier, but I want to get a little bit deeper into this. So to reiterate, lending exposure with the bank means that they typically are going to lend you out. We're working with the number 150K for like a Chase or like a Bank of America. Again, they're not solid numbers, right? It's case by case, but for those of you guys that are really been working with credit, you guys know that if you go to like a Navy Fed, it's usually right around 80, 90K before they start asking for more of the doc stuff. And so typically whenever you're applying for a 0% business credit card, it's going to go based off of projected revenue. Once you get up to that threshold, again, if you are looking at one of the bigger banks, 100, 150, sometimes 200, depending on also the relationship with them. That's why I said it's more of a spectrum rather than just a hard cut rule. But you can expect right when you start hitting that threshold, that's when they start asking for it. And you'll see that happen more frequently. That's when you'll start to see them ask you for those statements. Now, how does it work for the most part is there's 2 ways that they judge it. Number 1 is they are going to take a look at it on the LLC side, which means how much funding does this LLC already have with us? And then the second way that they'll underwrite it is how much does the owner on the LLC already have with us? So this is when they do kind of like a duo where they take a look at how much they've given you on the personal side and how much they've given you on the business side, which is what I usually tell my clients is if you've already built out a pretty strong personal credit profile, which in my book is right around 65 to 80K in total revolving credit cards or total revolving credit lines, I don't really find much of a return on time or return on investment of you constantly going back in and trying to get more personal credit cards. You're going to find it serving you far better, shifting that focus over to the business credit side. Number 1, there's far more upside that you can get approved for. Number 2, it's not going to report on the personal credit side because you're not defaulting anyways, right? You're running a legitimate business. And then number 3 is you're going to typically get better terms, like 0%, 12 months, 0%, 18 months, 0%, 22 months, what have you. And so this is typically the first 2 areas that to look at. How much does each LLC have? How much does each social security number have or each social/applicant have, which is why you being in line, which I'm going to get to here in some more personal information, but you being in line with how your personal information is reading to the eyes of the credit bureaus, how your personal information is reading to the eyes of the banks is still important. You never want to neglect how you look as a business owner to the eyes of a bank because you're still having to personally guarantee it, especially if you're a startup and especially if you're under that $2 million a year for the last 24 months. So more financial documents are typically going to be included or asked for, including income proof. So this can be tax returns, this can be bank statements, this can be a profit and loss statement, what have you. That's typically what they're going to ask you once you have the lending exposure tapped out. Number 4, which is another reason why you're most likely running into not getting funded. Now we're going to get a little bit deeper into this, but I want you to follow me because it's going to be super important. Because if you can nail this part, not saying that it's the most important, but if you can nail this part, you're going to open up the floodgates for funding. A lot of your information that you have on the personal side is being utilized for underwriting decisions far more than you think. And I know that's not what you want to hear, but it's what you're on my channel for, so I'm going to give you the truth. And what that means is if you are seen as a high risk, we often talk about high risk industries, but if you are seen as a high risk owner, that can also be as equally detrimental, because even though they're technically lending to the business, you're signing off on it. So you're an extension of the business, especially again, when you're starting out, and especially if you're under that $2 million range. So EWS, Early Warning Service, is owned by 7 of the biggest banks in the US. So if you want to pause the video right now, Google Early Warning Service, hit the website, and take a look at the 7 banks that are owned, that came up together in this system. Now, I'll give you the 30,000 foot overview of what the system does. Is they pretty much take a look at your spending habits as a consumer, so you kind of get like your own separate credit report with EWS. And they're also pulling your data out of that to see, okay, how many defaults have you had? Have you ever had a BK, a bankruptcy? Have you ever had a foreclosure? Do you have student loans? Okay, how many businesses have you opened up recently? Okay, how many names that you have, or how many businesses are attached to your name? This is all information that they're gathering on you. You can go to Early Warning System, you can pull up a credit report, and then you can see more so what they have on you. So that way you can try to see what needs to be cleaned out or what needs to be corrected as well. Check system. If you've been watching my channel for some time, or if you've been keeping up in the credit space for some time, then you know this right here could be a game changer as well, along with Core Logic, because essentially what they do with this data, which kind of is what Early Warning System does, is where they predict the likelihood that you're going to default, in this case that your business is going to default, is they're looking at, okay, if you had, for example, which I have here, a college account that you used to have, and in that college account, maybe that was 15 years ago, and you owed Bank of America $25. They close the account, but you still owe them $25. Sometimes they can get a little petty. If I'm being real with you, they can get a little petty, and they'll hold on to that. Now, I'm not giving you these bank names just to go at them, right? I'm just giving you ones off the top of my head, right? It could be insert bank XYZ, credit union XYZ. And so Bank XYZ says, you know what? You owe us $25 because you're still in our check system. You overdrafted with us. You never paid it, or you were negative and you never paid us, right? So you try to go back in thinking that, okay, let me open up a business bank account and apply for a business credit card with insert bank name, let's say Bank of America. But they say, wait a minute, we never forgot. So even though your credit report, your TransUnion, Equifax, and Experian to you looks clean, they're pulling all of this data right here. And they're saying, no, man, you still owe us $25. And I've seen this happen so many times where I'm walking a client down this same framework that I'm giving you, and they'll say, dude, I've been in jail. That's what we call it, right? Not physical jail, but I've been in jail with this bank, and they won't let me open an account because apparently I pulled a report and it looks like, yeah, I owed them money back, when I was younger. I didn't know any better, or I just didn't know that I owed them, period. I've had clients with big businesses tell me, dude, I had no idea that I owed them money. I forgot even having an account with them. It was so many years ago. And that's why I kept getting denied for business credit lines. That's why I kept getting rejected for even opening up something as simple as a business account. Like, it kept getting flagged, like it denied me, and the bank couldn't do anything about it. This is it right here, which is why I'm giving you Core Logic, check systems, and EWS. So pull up reports for all of them and see what type of information is on there and what type of information you can get fixed that's erroneous. Number 5 is lack of preparation. Business financials is going to tell the health of your business. Business licenses is going to tell the banks what your business is designed to do or what you specialize in. The business presence, I want you to think of it of how your business gets clients. So think of this as your website. So do you have a business website? Do you have any reviews on Google? Do you have a Yelp account? Do you have these little data points that they can use? Okay, this is a legitimate business. They're actually out there. Do you have an Instagram? Do you have a Facebook like page or a business page? This is how we get clients. Business structure is how the business is set up. Do we have an LLC? These are operating agreements. This is the articles of organization. These are our members. What's the split on the members? Do we have 25% across the board? Do we have 4 members at 25%? Do we have 2 members 60-40? Are they 50-50? Are they 51-49? You want to have that business structure in place. This is lack of preparation. And then you want to have your business plan, which is how you actually plan to make money. 1, 2, 3, 4, 5 pieces that if you can dial this in, and when you go to sit in front of a banker, or when you go to sit in front of a loan officer, if you're maybe looking for a bigger deal, they're going to expect that you have this. If you don't, when you get off the video, again, make sure that you dial this in, which, by the way, I should probably leave this PDF somewhere in here. Let me know if you want a copy of this PDF. I could probably leave it for you somewhere. Maybe we can create a page and have you download it. And then last but not least is funding sequence wasn't properly set up. I left this for last because a lot of people try to rush to this right here. What are the banks? What are the banks? What are the banks? And there's enough videos on YouTube breaking down banks with no doc products, banks that are giving out 50K no doc. Like, there's a lot of channels out there that are doing that. I wanted to take it deeper though, because sometimes we try to rush to the banks not having everything in order. And so we'll think that, okay, well, we're setting it up right. I went to this bank and I got denied and I don't know why. So whoever created that video was lying, or no, that bank doesn't actually do that. Really what it is that you're missing so many more pieces, which is what I hope to give you in this video and on my channel. And so you're shotgunning too many applications, or you've shotgunned too many applications at once. What that means is you saw 5 banks that you wanted to go to. You want to get 2 credit cards at each of them if you're just doing a traditional credit card stack. And then you just, okay, whoever approves me, but then you're getting flagged inside of the system as credit phishing. And they're like, yeah, that's kind of sketchy. Let's not approve them, because they can read your IP address. They can see your financials. Okay, this isn't actually a legit business, the way that the application was set up, the whole 9 yard. Next is you're applying during a slow season in your industry. That also isn't talked about often, but banks essentially have a criteria of what they look like. So they know, okay, if we were to lend this business money, I'll give you an example. If you were to lend a citrus business funding in the middle of winter, we know that we have to wait quite a few months in order for them to come into prime season. And so they understand this may not be the best return on our investment, meaning the credit that they give you. So let's hold off on actually approving them, which is why you want to know when your high season and when your low season is. If you're in a year-round type of season, you're good. If you're in a seasonal type of business, you want to know when that is, so that when you apply to the bank, you have your financials as well, or at least your business plan to show them, no, I've made money around this time of year. This is what we're doing, or this is what we're projected to do. If you're maybe taking more of a projected route. Business is too new for funding. Right here, business is too new for funding that the banks offer. Just because you saw it online doesn't mean you're going to get approved for it. Just because you saw people talking about it doesn't mean you're going to get approved for it. That's a big mistake that I see. Oftentimes, there's little details that are left out with your business not being properly structured, or your business is being too new. And so you want to do your homework first prior to actually applying and burning a hard inquiry. And then lastly is no presence in the banking database. Not to confuse this with this right here, which is no presence. This right here is presence in social media, presence on the internet, presence in your local community of how you get clients. This right here is presence inside of the bank, meaning you don't already have an account with them. You don't have at least a personal credit card. You don't have a security credit card. You don't have a business credit card. You don't have a personal loan with them. You don't have an auto loan with them. You don't even have $5 in an account. That means that you don't have presence inside of that banking database, which you are seen as a brand new cold client. And so one of the fastest ways that you can warm up that account is open up a checking. If you wanted to open up a checking to then, on the personal side, to then build your way into a business, because it's going to be less fees and a lower amount to open it, do that. If you have the cash flow and if you have the liquidity to open up a business account off the rip, go ahead and do that, because it's going to help build up your internal bank rating, which on the back end means you're going to seem like your file is more trustworthy and more reliable in terms of this is a business that we can do business with, right? So these are a quick recap, the 6 different reasons of why you're getting denied, how to never get denied again, if I'm being honest with you. If you dial this in, your personal profiles are not fully built out, existing debts are too high, lending exposures are tapped out, the owner is considered a high risk, lack of preparation, and lastly, funding sequence wasn't properly set up. So again, if you want a copy of this, I can see how we can maybe attach it down here in the comments somewhere, have you download it. But let me know in the comments if you want a copy of this. Other than that, we will keep the videos coming. Let me know what you want to see next here on this channel, and we hope to provide it for you. But other than that, I appreciate you guys checking me out. Until next time, everyone, I will see you in the next video.